Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So we came in, market was down about 15 handles. We talked about whether or not there could be commitment to yesterday's big up day, or will we be back in that no memory, choppy, erratic distribution, or just tire everyone out, whether you're long or short, before another move. And that's what wound up taking place. Basically, we didn't hold the 50% line from yesterday, and then we actually got between like 20 cents from the prior low, and then it was a very choppy afternoon. So from here, it's it's really hard to kind of know what to expect. So hopefully everyone has kind of risk down, and if you have some longs on, you have a reason and you have risk. And the same way if you have some shorts on, because it's hard to tell exactly right here. So anyway, you go to the chart of the S&P cash, and basically the market's come down to retest this spot, a spot that everyone kind of wanted all summer, and now we're here. How did we get here? Well, we broke below this 2160, came back and retested it yesterday, and now question is, are we trading in erratic, in some kind of erratic formation in order to build some kind of wedge type pattern, which means maybe there's like another, maybe a little bit of an update tomorrow, and then we figure out whether we come back up or continue to the downside. Okay, at this point, I'm a little long overnight. I had a very, I tried to be hands off today, and I'm, I don't know why I'm long overnight. I'm long small. For my gut tells me we had two big down opens, and nobody really wants to be long. So maybe tomorrow, they open them up. So I'm in small, but enough that I can handle, and we'll see. We'll see what happens here next. All in all, below every moving average. So if you're a trader and you're risk averse, I do think we might have another day or so before this resolves, either to the downside or snaps back. We shall see. Today, Apple was really strong. Yesterday was, it showed relative strength. We had a nice trade in Apple yesterday, and then today closed on the highs, gave you some nice follow through, and now we'll see if Apple could hang out and digest above this gap for a session or so, and then maybe it continues to the upside. I did not go long Apple. I just feel like there's too much news around it right now. I was long it yesterday, and technically it gave you some signals to be long overnight, and you had no pain even with the down move. So at this point, let it prove it could hang up here, and then it can continue, and then maybe at some point, I guess maybe the iPhone 7 is doing that well, and then we'll see. It's still all in all, I guess it kind of came back here and retested the gap and held, and now you're right back up into this spot. So we'll see whether or not it could, finally be like a safety trade with which sometimes Apple is in a time of volatility. So we shall see. Holding this, that could be your stop, going sideways, and then maybe it continues. I am long a little BABA. Chanos, I don't think his argument was so great, and I like the, the counter argument from their employee or whoever it is. At this point, markets came all the way down to the lows and hung in there. So maybe if something wants to stay sort of positive or whatnot, it could continue to the upside. But again, it's not so. If you don't need to be in there, I don't think. Facebook, was a little weaker, came back in also. Touched the 21-day, held the 21-day, but still seems, just a bit vulnerable, just like everything else. Here you go. That's your 21-day. That could be your stop. Maybe another inside day or so, and we'll see whether or not this breaks to the downside to give us clues versus to the upside. I didn't touch Amazon and Google all day, and they were really weak. We'll see what happens, in like here. Okay, this is your big support now in Amazon. So it's not trading momentum. If you're momentum trading to buy high and sell higher, it's not the case right now. If you were looking for an oversold bounce from here to there, and you got it yesterday, well, today, either you're holding still some versus that, or you got stopped out as half this day was gone. Let me just quickly go to show you the spider chart. I posted it up a few times on Twitter. I showed you the 5-minute chart showing you like what we should have held if we were any good from the prior day. Why did I do it like this? So just say if you take this approach, you could see here was your gap down, okay, on Friday that never got filled. You actually came up. You had this really nice reversal spot here yesterday, and then pulled in the afternoon on that Fed statement, and then rallied to highs. So I figured today, if we were able to hold this area, maybe, it makes a higher low and packs and fill. Instead, I started getting long in here. I got stopped out right there, and then I really pretty much did a whole hell of a lot of nothing for the rest of the day. Then in here, I got long a little spiders, and that's what I'm long. I'm long little spiders, but it's, nothing to write home about. For some reason, I'm thinking, you have, a gap right here. You have another gap right here. If they want to, distribute some stock, maybe they try and, test this spot and push into the gap. But, I'm trying to use some intuition versus what's going on here. At this point, you have powerful selling because you have a gap down. Didn't get filled, another gap down. So maybe it tries to retest this at some point tomorrow. We'll see. Oil was, pretty much a culprit for the weakness today. But one of them, there were many of them. All in all, that it didn't really break yesterday's low, but we'll see what happens with the 430 number. A lot of people are saying that the great bullish oil number was only because of the hurricane, and now we'll see what happens next. But all in all, not really giving you much reason to be long or short it. More short than long, but we'll see. The TLTs, I just want to show you guys something because, just to show you how fast risk happens. Like this, on this day, the TLTs looked pretty good, right? It looked long. You heard all you guys ranting and raving about the TLTs about to break out. And then, just to show you what clues to look for. So if you were long, the TLT is saying, I'm going to be long and I'm going to add if it breaks above 139-ish, right? What was this high here? This high was 140, 69. What was this? This was 140, 35. You said, okay, I'm going to be long tier 1, okay, and I'm going to wait to play for a breakout. On this day, it tried to break out. Maybe you add to it, and then it closed weak. So if you added to it, you had to get back out and say, you know what, wasn't ready to go. Not playing it for momentum. And then on this day, that was your get out of Dodge. And if you had a bearish thesis, maybe this was your day 1 to short versus the top end of a range, day 2 to add for a potential downside follow through, which happened there. And now look at it. So all in all, you've had a really drastic move to the downside in the TLTs, which correlates to bonds, but at least it was technical. This is when on this bar you got below the 8 and 21 day, below a multi-month range, and now here you are coming into the 200 day. So that's the TLTs. How did this happen? Well, that's how it happened. GDX, I've been talking about the guys talking about a head and shoulders top here. I don't really see it. All I know is it's still on the right side of this intermediate trend line. We had a nice little red dog reversal here. Okay, from where it came from was very oversold, gave you an oversold bounce, couldn't hold this, and now I don't know. This is some pretty big support going sideways. I guess this is what they're thinking. Left shoulder, head. This could be your right shoulder now, and if this were to break this spot, you could see the 200 day. So just know that could happen. So if you're just playing the accumulation game and you never, sold some strength into that, use this as a big support area. GLD also, if the Fed's, so dovish, why is gold not, responding well? But anyway, still below the moving averages. It's still, if you're looking to buy high and sell higher, you're not in this. If you have a thesis on gold, then maybe you are. It's still, I guess, decent as long as it holds this spot. But again, this kind of stuff happens fast. It did this for a while, I guess, back here before, wound up going again. It's just very choppy now up there. They haven't been able to really break down these banks. I would have thought, with some of the weaker than expected jobs, just whatever economic numbers, it would have broken below this. It hasn't, or even the dovish statements, it still hasn't. So that's why the market, the market's coming a lot too, and it hasn't gone down. So just keep an eye on that for JP Morgan. And that's it, wrapping it up. I don't think you need to be in anything tonight. If we gap up 10, 12 handles tomorrow, you might be able to short it. If we gap down 10, 12 handles tomorrow, and we trade below, the recent low, you might be able to short that too, and then figure out if, that 2100 area is buyable or even lower. But either way, I feel like the ranges are bigger and you don't need to have such volatility. I'm long a tiny bit overnight just because I feel like we might, push one more time before it makes up its mind. But I could take that. I've been doing this for 16 years, and I've been flat the past 2 nights into these down openings, and I think it feels like everyone's scared to be long now. So maybe you get a little bit of a shakeup, but who knows? At this point, things are bent, they're not broken, and volatility is high. So know what you can handle, and don't trade out of your means. Have a good night.